Imagine waking up on a Tuesday, checking your investment app, and finding that the numbers have simply stopped. Where there used to be a balance, there is now a zero. No phone calls, no emails from the firm. Just a sudden, total silence that represents billions of dollars and thousands of lives ending up in a digital black hole. We are taught to watch out for the get-rich-quick schemes, the flashy pitches, and the promises of overnight millions. But those aren't the traps that catch the most people. This company did something far more effective. They promised steady, boring growth. They positioned themselves as the responsible choice for people who didn't want to gamble. It turns out the most successful financial crimes don't appeal to our greed. They appeal to our desire for safety. They succeed by adopting the exact appearance of professional, unshakable stability. It's hard to argue with a skyscraper. When a firm operates out of a luxury corporate park and speaks in the measured, confident tone of a seasoned executive, our brain stops looking for exits. We are conditioned to trust these signals. We assume that if a company can afford the prime real estate and the expensive suits, someone, somewhere, must have already vetted them. And because the first wave of investors actually saw their accounts grow, the story spread. It wasn't a sales pitch anymore. It was a recommendation from a brother-in-law or a trusted colleague. This creates a unique kind of pressure. When everyone you know is seemingly building a secure future through one firm, your own skepticism starts to feel like a mistake. You don't want to be the only person left behind. At this point, the firm didn't need a marketing budget. Its growth was being powered by a self-sustaining loop of human validation, a chain reaction where trust was the only currency that mattered. But while the public saw a success story, independent analysts were looking at a mathematical ghost. They started noticing things that didn't align with how the world actually works. A real investment is jagged and unpredictable. Markets fluctuate. To make money, you occasionally lose some. But this firm's numbers looked like this, a perfectly straight ascending line. No depths, no reactions to global events. It was a statistical impossibility. When experts pointed this out, the response from the firm was always the same: vague jargon and dodged questions. They claimed their proprietary strategy was simply too complex for outsiders to understand. Surprisingly, many investors heard these warnings and chose to look away. When a fact threatens our sense of security, we have a reflex to protect the lie rather than the truth. We tell ourselves that the experts must be wrong, because as long as the monthly statement says we're winning, we don't want to know how the game is played. The friction started with the withdrawals. A few investors asked for their money back and were met with technical glitches and processing delays. That quiet delay turned into panic. Phone lines died, digital portals deactivated. By the time people arrived demanding answers, the headquarters were already empty. The truth that emerged was devastating. The billions were simply gone. There was no proprietary strategy. The reported profits were nothing more than numbers typed into a spreadsheet to keep the illusion alive. In a single stroke, decades of hard work were erased. For the people involved, this wasn't just a financial loss. It was the sudden realization that their entire future had been built on a void. The scale of the collapse forced a difficult conversation about the people who were supposed to be watching. It raised the question of how a deception this massive could operate in broad daylight without being stopped. That failure leaves a lasting scar. When a safe institution turns out to be a hollow shell, it changes how every other bank and broker is viewed. It makes the entire idea of a secure investment feel like a gamble. It's a reminder that the most dangerous traps aren't the ones that look like a risk. They are the ones that look exactly like the boring, stable reality we desperately want to believe in. So the next time you see a perfect opportunity, look past the suit and the skyscraper. Ask the questions that feel uncomfortable to ask, because the only thing more expensive than a bad investment is the cost of blind trust.